Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 2nd of May. I'm Daniel Lam, your host for the podcast. Last Tuesday, we spoke about the topic of de-dollarization, which was recently back in the news headlines. Now, our conclusion was that any eventual de-dollarization is likely to be a multi-decade story. But of course, as it stands, it is moving towards that direction, very slowly, but surely. Now, one of the key investment phenomena is central banks' diversification into gold. Central bank reserves in US dollar returned to the spotlight following the imposition of US and European sanctions on Russia. That coincided with the acceleration of central bank purchases in gold in 2022. And diversification into gold continued this year, largely driven by China, Singapore, and Turkey. So let us look at some numbers. Globally, allocation of FX reserves into gold has been climbing from just under 10% in 2015 to 14% today. Now, during the same period, gold price rose more than 80%. Now, given that the US dollar still makes up roughly 60% of the global central bank reserves, there's still scope for further diversification of the US dollar into gold. And hence, there's potential for gold prices to rise higher. In our latest Global Market Outlook monthly publication, which came out last Friday, we are staying overweight gold versus other major asset classes, viewing gold as a hedge against terrorist scenarios with a 12-month forecast of $2,100 per ounce. Gold has had a strong showing in April, breaking above the key $2,000 level and staying above that for most of the month before falling back below that level in late April. A weaker US dollar, continued central bank demand, and return of investor interest are key drivers behind gold's strength, which we're expecting to sustain. Furthermore, a likely end to the Fed rate hiking cycle in the first half of this year, followed by rate cuts in the second half of the year, could lead gold prices to test 2020's all-time high. Lastly, gold safe haven properties also increase its role as a diversifier against the backdrop of elevated geopolitical uncertainties. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.